Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. And today we lead with news: economic conditions in China are in focus. The IMF has been reviewing China's economic prospects and it sees growth slowing relentlessly. GDP will slip to 4.6% in 2024 and they say it will keep retreating to 3.4% by 2028. The IMF sees them stuck paying the price for low quality development in the past and demographic limits that limit their ability to up their game in a meaningful way. The seeds for this growth retreat were planted years ago. And China's real estate market is having a rough start to the year, with January new property sales plunging to a monthly low not seen in 5 years, despite government measures to boost the ailing sector as it grapples with a liquidity crisis. New property sales were down 34% in January from a year ago and down 48% from December. Last week, Chinese stock markets fell sharply, with Shanghai down a startling 6.2% for the week, and this is presumably after the home team intervention. Investors are unhappy, authorities are nervous, and voices for major emergency stimulus are growing. Across the Pacific, the US economy added many more jobs in January than expected. Equity markets rose on the news and the US dollar strengthened, and bond yields rose on the view that the Fed may not cut rates as soon as they expected if the US economy is in a stimulatory phase. Average weekly earnings, which has been rising at about 4% pace in 2023, slipped to 3% from a year ago in January. However, markets focused on average hourly earnings, which rose more than they expected, up 4.5% in a year. After a strong rise in November, American factory orders rose only modestly in December from a month ago to be 1.4% higher than year-ago levels. There is nothing encouraging about that, although the January PMI suggested the pace picked up in the next month. And consumers in this market are clearly feeling better, however. The University of Michigan Sentiment Survey reported a big improvement and its highest level in 2.5 years. They called the change a surge. In Australia, mortgage approvals rose almost 12% over all of 2023, but ended the year on an unexpectedly soft note with a 4% monthly fall. And that December month data ties into housing market figures on prices and turnover that shows their residential real estate market momentum has slowed and that affordability pressures are starting to bite. And the FAO World Food Price Index fell for a sixth consecutive month in January, a fresh 3-year low since February 2021. Prices of cereals were down notably. Also, meat prices fell and dairy prices were stable. Overall, global food prices are back to levels that held between 2007 and 2014. Food is cheap in inflation-adjusted terms worldwide. And the US Treasury 10-year yield starts today at 4.02% and down 2 basis points from Saturday. And the price of gold will start today up $4 at just on $2,040 an ounce. However, oil prices are little changed at just on $72.50 a barrel in the US, while the international Brent price is now just under $77.50 a barrel. And the Kiwi dollar starts today at just on 60.6 US cents and holding its lower Saturday level as the greenback rose. It is a quarter-cent lower than a week ago. Against the Aussie, we're still at 93.2 Australian cents. Against the euro, we open at 56.2 euro cents. That all means our trade-weighted index starts today at just on 69.9 and down 10 basis points from Saturday. And tomorrow is Waitangi Day in New Zealand, a public holiday. This update will not be produced tomorrow. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Wednesday.